everyone, welcome. It is 1 p.m. on January 30th, Tuesday, and we just got the close. I'm sorry about this morning. Hopefully you got the notes that I sent out, and we weren't really expecting huge movement in the market today because of the FOMC minutes coming up and all the earnings that are coming up after the market today. So let's see if we got that mostly muted, quiet day that we were thinking we would get. So for sure on the S&P 500, we didn't really move anywhere. Let's see if that was a directional movement. Yeah, just barely down 0.08%. Not really anything to get excited about. And then on the QQQ, we did get downward movement, 0.69%. But as you can see from a daily perspective, that's really nothing. All we did was just bounce around in this range right here. So let's take a look at IWM. Same thing, not real significant downward movement. And then the Dow Jones, we got upward movement. So we actually did get a little bit of directional movement in the Dow Jones. We were talking about earlier this morning, or at least in the note that I sent out earlier this morning, we talked about how the Dow Jones made a new high, but the the QQQ did not. So, and how that was reflected of a weakening market, weakening sentiment, and a little bit of a flight to safety. Of course, earnings could change all of that. We've got Microsoft, we've got Google, we've got Amazon, I think Amazon, Apple, all the big players, like over 20% of the market cap in the S&P 500 is reporting this week. So if they do well, that sentiment in the tech sector could change and flip around. But as of right now, it's not looking that promising. The other thing we want to keep an eye on is because of the FOMC is these bonds. The bonds did bounce off of these flat levels the last couple of days. We are approaching that MA 200. So if we break up, then that'll be license for the equity markets to continue moving higher for a little bit. If we break down, then we're probably going to get that pullback or correction that we've been anticipating. So we'll see. Either way, this week we should get a direction. Okay. So we've been waiting for clear direction for a while. And this week, finally, we should have a very good idea if we're going to have more room to the upside or if we're going to pull back first. So let's see if anything surprising happened during the day. It wasn't like yesterday we had that surprise surge in the last hour. Everything looks very quiet and very normal. So let's take a look at where we are in terms of the major indices. Okay, so the S&P is still following this blue line that we drew, and this 490 the psychological resistance that we talked about, well, it's just floating right above it. So remember how I said that normally, we like to draw these flat lines, but really it's like a region. So we're floating around in just above the 490 region. So basically we are still waiting to see what's going to happen. Let's take a quick look if anything changed in the Fed Watch tool. So 97.9%, that hasn't changed. Let me refresh that just in case. Okay, and then in March, that's the more important number. So we went down quite a bit from yesterday. So yesterday we're looking at 47.2%, and now we're looking at 40.7%. So we came down a good almost 7%. Just leading up into the Fed meeting, I saw real quick right before we hopped on today, I saw a little news blurb come across my screen. Let me see if I can find it. CNBC, looks like CNBC Fed survey. Okay. So now they're saying that, no, that was old. Okay, let's see. Okay, Fed will cut fewer times and start later than the market hopes, according to the CNBC Fed survey. That's not too surprising. We've been talking about that for a really long time, but it looks like we are starting to see that in these numbers. And then tomorrow we'll know for sure. But if this number is going to go way down, but we'll push up the percentages higher, maybe in April, May, or June. I don't know. Yeah, May or June. But we'll just see. We'll know for sure tomorrow. Or at the very least, when those minutes come out. We'll get an idea tomorrow, I guess we should say. We'll get an idea tomorrow, and when the minutes are released, we'll know for sure. So probably going to be some pretty big market action. I believe normally they release or they announce around 11 a.m. my time, so 2 p.m. Eastern. Let's see, yes, 2 p.m. Eastern, and then the Powell will speak half an hour after that. So we'll look for initial reaction and heightened volatility right at 11 tomorrow. At 11:30, there will be another spike of volatility and movement. And then again, I've been reminding you guys for the last couple of days that the initial movement is usually the wrong one, ultimately the wrong one. Meaning that if we go up after the statements, at least the pattern with Powell has been we would go down the next day and overcome that upward movement. And then vice versa. If we go down after Powell speaks, then the next day we will go up and overcome that downward movement from before. So we want to be very, very, very careful about making any conclusions tomorrow. We want to draw our conclusions probably on Thursday. And we also want to be careful of all that volatility that could happen in the markets starting at 11 o'clock tomorrow. Now, that could be a really great thing if you're a day trader, or you could be like, whoa, that really increases my risks as a day trader. So it just depends on your style and depends on the data that you're actually looking for while you're day trading. So if you're not comfortable with a lot of movement, then you would avoid it. And then if you really like or you really profit from the fast action volatility, then you would trade it. So either you're going to have a lot of action tomorrow, or you're just going to sit on your hands and not do anything. Let's take a look. I want to see exactly what time we get some of these big ones. AMD, Google, Microsoft, Starbucks, AMD. I wonder if they give us a time. They don't give us a time. Usually it's around sometime in the first 2 hours after the market closes. So let's see if we can get any market action. AMD, nothing too big so far. Google, maybe they did. Okay, Google did report. So down, that's not looking great for QQQ. AMD probably got dragged down with it, so they haven't reported yet. They're a little bit, maybe half an hour or so away. Starbucks looks like they did well. We got initial negative reaction, but recovered very quickly from it. And then Microsoft, initial positive reaction, but then very quickly went down. So that's probably the forward-looking statements. So maybe they beat, and then, well, they haven't reported them yet. Okay, so we can't say for sure. So either way, it's looking like, oh, I just lost it. AMD, we don't know about yet. Google, major market cap here, but in the aftermarket, let me go back to the day trading one so I can see the aftermarket. Okay, so down significantly in the aftermarket so far. Microsoft down pretty significantly in the aftermarket so far. So that is not looking good for the QQQ. So tomorrow, so yeah, you see QQQ got dragged down by those two. So we could see a gap down tomorrow. We'll have to see how the rest of the earnings go and how the rest plays out. But those are huge market cap right there, Microsoft and Google. So it'd be surprising if anything looks so good that it would turn this around. So those QQQ hedges, if you put them on, like I think in the past week or so, we've talked about QQQ hedges a few times. We gave that example once or twice. So hopefully you have those in place and it will protect you from movements, or your other positions will be protected or offset by gains from the hedges that you have from QQQ. So good. If you don't have them, it's probably a little too late. You guys are probably going to get that movement tomorrow. But at the very least, what we don't know yet, and what we're going to wait for the rest of those earnings and for the FOMC minutes, is whether or not we're going to pull back because of that movement. And it's a little too early to say. It's too early to say. So if we start breaking down below these flat lines over here, these bottoms, these lows right here, then we could be heading towards this aqua line right here, or any of these purple lines right here. So that would be a, say, about 5% move. And that's a respectable pullback. So we just want to be prepared in case that happens. So check your portfolios. Hopefully you're not super heavily invested at this moment in time, but your portfolio should still be leaning positive. We should still be leaning to the bullish side, but we definitely want to have hedges in place because we are at a danger of turning around of that 5% pullback. Or if things look really bad after we pull back 5%, then potentially up to 5% or 10%, another 5% correction. So just watch out, make sure you're well balanced. Don't put too much capital at risk to the long side right now. Definitely not too much capital to the short side either. So you just want to stay really well balanced and just wait for this market to pick a direction, because this is sideways, right? This is sideways. So what you want to be able to do is once the market picks a direction, at least clear direction for the next week or two, then you want to have capital available so that you can capture that opportunity for the next week or two. So if it's going to be a pullback, then it's going to be longer. Pullback or a correction, that could last 1 to 2 months, 3 months. But if it's just an extension of this trend that we've had so far, you can see we go about 1 to 2 weeks at a time. 1 to 2 weeks at a time. So those longs, you're not going to look to do for too long. And the shorts, you could potentially hang on to them for a little bit longer. So tomorrow is going to be really big. Watch out for the volatility, FOMC minutes. We started to get these big earnings starting to report. Let's just take a quick pick before the market. Peak, I should have said, not pick. So we got a few, like Boeing. Boeing will be important, especially with all the recent news in Boeing. It'll be important to see how their earnings are doing. And then tomorrow after the market close, we've got not much, but the next morning, I'm pretty sure we've got Apple. We've got who was the other one? Meta, I think it was. So we got some major market cap coming up in the next day or so as well. So just keep your powder dry, stay safe, stay balanced, still leaning to the upside for now, but definitely want hedges in place in case we start pulling back. So have a wonderful rest of your day. We'll see what tomorrow brings us and how much volatility we actually get. We'll probably look to fade any move after the FOMC minutes. And then that's it. Just be careful. This is very active movement in the markets in the next couple of days.